Markets are up. Markets are down. Markets are up. Markets are down. No, wait, what's happening? What is going on here? That's how I've been feeling for the last few weeks. So this Middle East situation is really adding some volatility to markets. Last I looked, there has been talk of ceasefire and oil prices did start to come down based on that information. But now, I swear my information changes every few hours. I'm seeing a couple things said maybe Israel has now attacked Iran again, and now all of the ceasefire talks are off. So if that happens, we're going to see the oil prices go back up and the strait may get closed again. So who knows where we're at? Thought I was getting a good handle on this, and then it changed again. So last I did read, Iran had allowed some shipping through the Strait of Hormuz. That would be great if that got some more oil flowing and some other, goods started to get shipped. Great news. They shut that down again. Then we're back to where we were. Try not to drive as much, and it's costing a lot to fill up the tank. So hopefully this gets resolved sooner rather than later. The other impact of all this is, as I'm sure many of you have been hearing, mortgage rates have gone up. Year over year over year, we were doing pretty well. Mortgage rates for a conventional purchase were getting into the low sixes, and even I think for a minute touched 5.99. I'm not a loan officer. I can't quote exact rates for you, but in general, that's roughly where they were hovering. And now in basically the last 6 weeks, they've jumped from 6% up to 6.5%. So huge change. That did push a lot of buyers onto the sidelines again. And all the other volatility in the Middle East has also pushed some sellers to the sidelines. They're kind of waiting to see what's happening. A lot is still out there. There's a lot of activity happening, which is great news. That's typical spring in the Sacramento region, but some buyers and sellers are waiting. They have an increased level of caution right now until we get some more stability in our US economy and also see less of an impact from the conflict in Iran. Then we're probably going to see some shifts in our spring market. Quick reminder, please subscribe if you haven't already, like this video, share with your friends. I try to bring real-time data in the Sacramento region and do both a micro and macro analysis of what's happening. Look at our long-term trends and try to give you information to make educated and worthwhile decisions on your real estate needs in Sacramento. Thank you. Moving on. Anyway, what I'm seeing here, we might end up in a similar situation to 2025. We came out of the first of the year. We saw really strong activity. Home values started to appreciate a little bit. We saw really, really strong pending activity. Inventory was up. Everything was moving, right? We had good sales activity. And then in March, all the talk about tariffs, the real world implications of that, started to feel some of that. And, for better or worse, it really slowed down the real estate market. So we were trending up and then it just went flat. And we didn't get the robust spring season that we normally do in the Sacramento region. And I have a very small concern that we might end up in the same thing. So the data isn't quite showing it yet, but as an agent that has been operating in the Sacramento region for over 2 decades, and the conversations that I have with other top professionals in this area that are literally in the market every single day, and we're having conversations with buyers and sellers, we are feeling a shift over the last couple of weeks, and the data is not quite showing it yet. So I'm very curious to see what happens next month when I do this update video. Basically last year, strong start to the year, tariffs pushed things down, flattened it out, and we didn't really see that big pickup for spring. Might be happening again. We're seeing really strong activity, but if this conflict issue in the Middle East puts pressure on the market, rates are going up, that could flatten things out again. So I'm watching closely. The good news, inventory has been steadily increasing this year, so we're grateful to see that. I know there are a lot of buyers that have been looking around. They're just not finding anything that really works for them. It is a tough market for some folks. Others, it really depends what you're looking for and in what price. So, others they're looking at 4, 5, 6, 7 homes in one weekend. Some folks are waiting 2-3 weeks to see one home pop up that meets their needs. So it's really interesting. What I am seeing is that this slower rate of pendings might be to blame for some of these homes that are seeing continual price reductions. Part of that could be sellers just started way too high for the current market. So instead of adjusting to the changing dynamics, the sellers continue to wait for the activity levels to come back. And it's not the right strategy to get their home sold. Interesting stat, looking at the average list price and the average sold price, there is a 16.5% gap between those two in the Tri-County area. That's insane to me. That is a massive disconnect from where the actual market is moving. Now, the difference is if you look at the average list to sold price ratio for those homes that are actually making it to the finish line, now it's down to 2. It was a 3% difference. So you might be wondering, how do those numbers work out? Well, 16.5%, that is the gap between the average of the listings and the sales. So a lot of those listings just never actually sell. They get withdrawn, they get canceled, they get pulled off the market. So that 3% difference, list price to sale price ratio, is really the homes that they get listed and actually make it to closing, in case you're curious. So that's pretty big. So basically a home that's priced 16.5% over the market, it either expires or the sellers cancel the listing. It never sells. It's just not included in the other ratio. So I would say that right now, I don't actually have a lot of one size fits all or blanket advice for buyers or sellers. Had a lot of consultations with both over the last couple months, and it's really come down to a really personal financial decision and what's available in the market for what you're trying to do. What are the reasons that you need to sell aside from the financials? What are the reasons that you'd like to buy aside from the financials? And do those help outweigh one or the other? Let's dig into the data because I know that's what you're all here for. Right now, Tri-County, that is Placer, Sacramento, and El Dorado. The number of residential homes for sale increased 15.7% for the month of March. Very good continued growth since the beginning of the year. And that's actually a 3.8% increase over this time last year. So really good to see strong inventory numbers. Pendings increased 35.3% from February to March. That's a huge jump. January to February jumped significantly. We're also 16.3% increase in pendings from this time last year. So overall, we're doing really well. There's a lot of activity in the market. That being said, not all of those pendings are translating to closed sales because we are seeing a significant fallout rate. Home sales from February to March did increase 20.8%. As I've said a few times, the pendings lag by 30 days. So closing activity that we're seeing in March is actually the pending activity from February. So really strong there as well. And then that number of sales actually had a 2.1% increase over a year ago. So overall, I would say market activity is looking really good. Again, that's through the end of March. And that is a month over month. So I wish I could break it down weekly or daily, but that would take a lot of time and effort. And I'm not there yet, but maybe an AI program can do that for me. So that's my goal for the next few months. So the days on market in the Tri-County area improved by 17.9%. So that we dropped from 56 to 46 days. That's great. Things are moving quickly. List price to sold price ratio increased 1%. So it went up to 98%. So that's a number we actually haven't seen since May of 2025. We've been hovering between 96, 97, and now we're finally back to 98%. So again, usually see those stronger numbers during springtime. Homes are still taking 5 days longer than they were this time last year. So kind of interesting there. The median sold price for the Tri-County area single family homes increased 2.4% in March. It's now up to $599. However, that's still almost 2% lower than this time last year. So again, month over month, we need to look at year over year, look at the macro trends. But overall, I'd say the market's still pretty flat. We see seasonal trends. It's up, it's down a little bit, but overall pretty flat for the last 3 years. So months of inventory declined from 2.3 to 2.2 months. So we're burning through that inventory. That's not a huge change though. Like I've said a couple times, the spring markets started strong, but there are definitely some signs that it might be losing some of that velocity. So I'm going to keep watching the data on a weekly and monthly basis and bring that to you so you can stay educated. Moving on to Placer County. Residential homes for sale increased 15.6% for March. Pendants jumped 35%. and number of sold homes increased by 32.5%. So substantial increase there. Still slightly lower activity in Placer County than this time last year. I know one thing I've said about Placer County a few times, they do have a little bit more volatile swings in some of their market data. So the activity really drops off more in the holidays than it does in the Tri-County region as a whole, but it also came back stronger right after the holidays. So a little bit wider swings, but still very strong. Days on market in Placer County dropped 12.3%, so it went from 57 down to 50 days, a little bit longer than the Tri-County average, still moving well. List price to sold price ratio improved also from 97 up to 98%, positive sign for Placer County home sellers. The median sold price in Placer County for single-family homes increased. It was $639,000 in February. In March, it increased to $676,000. And that's a 5.8% change. So quite a jump. Good news, because we did see a pretty significant dip back in January. So we're making up for that. Inventory levels also decreased by 16.3%. So Placer County has gone from 2.5 months of inventory down to 2.1 months. Overall, activity is great for March. Good spring movement. It's difficult to project how the rest of the year is going to go because obviously we have these random events that can change the markets within a couple days, sometimes within, a couple hours. So I'm going to keep you informed of everything. I'm fairly optimistic for this year for the real estate market if we can get oil prices under control and see some stabilization in the Middle East. So if you'd like a specific report for your area, for your home, or for yourselves as a buyer, or you'd like all of this information in a PDF, just comment below with your zip code. I'll provide that for you. Thanks for sticking around, and I will see you next month with more information.